We've heard some of the anecdotes coming out of Davos. We know what she said. We know what the data said earlier in the week. And then Procter comes along today and says China up 15 organic. What is the truth in terms of the pain China's enduring right now?
Well, I think China's slowdown is already confirmed by data. Most important, the Chinese government has been fully recognized the current situation, and they have been taking the measure, counter-cyclical policy action today, this year. They are committed to have much more ease in monetary policy, aggressive fiscal policy. They are taking measures to actually stimulate domestic demand, particular investment demand. I think, yes, the growth will continue slowing down, but the pace of the growth is slowing down will probably going to be slowed.
So you think they can manage this for years, essentially, in-house, through their own tools?
I think currently it apparently facing a lot of challenges, in particular external challenges this year. Everyone is painting that the year 2019 will face a so-called synchronized slowing down. China's challenge outside is definitely outstanding. So they have to emphasize a lot domestic demands. Policy-wise, is it enough or not? I think they do have a policy tool in the boxes. They are actually trading between whether they like to have a really big stimulation that may lead in a long-term troubles, or they're going to be short-term possibility to see. I think they should be able to manage to avoid this kind of so-called economic recession, hard landing, the market worry now.
So I guess the question then is, how much urgency is there on either side to get this thing done, or at least push it past March?
So I think there's certainly a fair amount of urgency on the U.S. side, because just think about the political cycle. If we don't get a pickup in growth activity in the U.S., if the shutdown lingers, I mean, it's possible you could actually get growth slipping into negative territory by the end of the first quarter. If that happens, the market's really not priced for that. So we need to get some signs of either the shutdown resolved and also some progress on that. Markets will be kind of stable. Any more substantial progress, I think that's a boom.
So you think the shutdown is altering the trajectory of trade talks with China?
I think it's going to drag growth down, and we're already starting to see impact beyond what just government workers not getting paid. You're seeing obviously TSA workers not showing up at airports. Companies can't get for IPOs approval. There's things like that. They're going to have to start to have a material impact because we've never gone this far before. So I think it forces their hand a little bit.
But some of that's going to be recouped in the second quarter if it happens, right? I mean, we had Larry Kudlow on yesterday who said he expects the economy to bounce back quickly if that's actually the scenario that plays out.
It should, but we're also sort of on uncharted territories because we've had government shutdowns of maybe 25 days, but now we're at record-setting territory. And if we go 2 or 3 months, could this actually have more structural damage to the economy that doesn't easily bounce back in the second quarter? Like it's probably kind of level shifts the economy down.
Xingdong, when China is looking at this negotiation with the U.S. and sees the shutdown playing out, how do you think that's playing in terms of the leverage that they have or the amount of patience that they're willing to have in maintaining their position despite pain?
Well, from my observation, the shutdown definitely making Chinese party worried, concerned whether there were going to be official coming out and negotiations going on. China, from Chinese side, based on my observation, they get ready to talk, okay? I think there's a 3 levels issue. Agree to agree to disagree, and disagree. So I think the agree to agree might already be settled down. But agree to disagree is what actually, like he say, structural change. They need a more intensive discussion between chief negotiator in China that's going to be represented by Vice Premier Liu He is coming to talk. They need a lot of preparations coming up. If they can sort it out, I think China and the U.S. is ready to get a negotiation to a reasonable deal. But this is actually really up to the U.S. side. It's not Chinese side.
It's a really interesting wrinkle. Reuters has this piece today saying the president will not take away a hard line just to get a deal done. But then others argue that he didn't campaign on IP protection and JVs. He campaigned on a trade deficit that he wanted to go away.
It's unclear exactly what is their their threshold. Optically, sort of like a trade deficit coming down is easier, and whether he can sort of sell that, that's a harder story. It's also people in the administration, his advisors, Lighthizer, Navarro, they're the ones who kind of wanted, think of China as being a sort of a long-term threat. So it's really unclear from at least Trump himself, what is his hard line in the sand on this.
It seems to me, based on some of the comments we've gotten, especially recently, the agree to disagree, the structural issues, if there's not an agreement on that, it would take China to acknowledge that that's even taking place, and I don't think we've gotten that right. And then this idea of an enforcement mechanism to actually uphold that, those still seem like the two countries still seem like they're very far apart on that, which makes me think that a longer term deal is really not necessarily possible. Am I crazy here?
I think I will probably agree with you. They have to be distinguished what China and US can reach agreement, what could be, what could not be. So they have to distinguish. You just cannot have all the agreements put in together for the longer term. So we have to understand there is a so-called trade issue. There will be an issue or dispute over technology developments, and there will be strategic developments. So China and the US, I don't think will be able to solve within a short period to solve the strategic competition. But we will be able to solve actually like trade competition. So that's what is you said. The Trump probably going to be more interesting on trade deal. That would concerning to me is a three areas. So agree to agree. Trade imbalances. Okay, IPR protections, and the market access. These are three things I think both in China and the US could reach agreements. For technology, for structural changes, the SOE roles, the government subsidies, the Made in China 2025, that may be regarding more or less more the actually longer term. So they're going to be setting down into the strategic agreement, not going to be so all the time.
So those longer term situations, those more structural issues, if we don't get some sort of agreement on them and President Trump says, that's it, I'm walking away and I'm raising tariffs to 25%, what happens to markets?
I think markets sell off. I think we're already seeing over the past month that part of the rally is attributed to the investors believing there's going to be some sort of deal, at least an extension. Even the talk, there was a report of a week ago of the tariffs coming down maybe, which kind of floated and kind of went back quickly. If this goes to 25%, coupled with the shutdown, I think markets are down sharply pretty quickly.
Is this scenario even potentially priced into markets at this point?
Right now, I'd say it's not priced in at all,
Okay.
or at least very little.